All right, let's just dive right in. We spend so much of our time trying to predict what's coming next, right? In the markets, in politics, even in our own lives. But what if the future isn't just hard to predict, but is actually fundamentally unpredictable? We're going to explore why our knowledge has real limits and what that really means for how we should see the world.
So to get our heads around this, I want you to imagine the world from a turkey's point of view. For 1,000 straight days, a farmer shows up with a bucket of food. Every single feeding just reinforces the turkey's belief that, hey, this farmer guy is my best friend. He's a totally reliable source of goodness. I mean, the data is just overwhelmingly positive. Its confidence in a stable, friendly future gets stronger and stronger, day after day.
And then, bam, the pattern breaks. Catastrophically. The turkey's entire model of the world, which was built on a mountain of solid evidence, turns out to be fatally wrong. You see, it couldn't see the massive, game-changing event that was just over the horizon. This is what's known as the turkey problem, and it's a perfect example of the limits of learning from experience. And here's the kicker. We are, so often, the turkey.
So where does this really deep unpredictability come from? Well, it's not just random luck or something. There's actually a scientific principle at play here, and it starts with a concept that sounds almost poetic: the butterfly's chaotic dance.
This is the world of chaos theory. And what's so wild about it is that even systems that follow fixed, deterministic rules can look completely and utterly random. The problem isn't that there are no rules. The problem is that the final outcome is just incredibly sensitive to the starting point.
Edward Lorenz, who pretty much pioneered this whole field, put it perfectly with this quote. I mean, just think about what he's saying. If you know the starting conditions perfectly, like down to the last decimal point, you can predict the future. But if you only know them approximately, which, let's be honest, is always the case in the real world, well, your prediction quickly becomes totally worthless. A tiny little error doesn't just create a tiny little deviation. No, it creates a completely different future.
And you know, Lorenz's discovery was a total accident. Back in the 1960s, he was running a weather model on his computer. To save a bit of time, he restarted his simulation halfway through. But when he typed the numbers back in, he rounded one of them, just from 6 decimal places down to 3. A change so small it seems totally insignificant, right? Wrong. That tiny rounding error produced a weather forecast that was so wildly different, it looked like it came from another planet. And this is what led to that famous metaphor of the butterfly effect. Now, it's not that the butterfly's wing flap is literally powering the tornado. Of course not. The idea is that that tiny, tiny disturbance in the atmosphere could be the one microscopic change in the initial conditions that sends the entire massive weather system down a completely different path. It's a symbol for how a tiny, unknowable change can have massive, unpredictable consequences.
Okay, so if the butterfly effect is the quiet, humming mechanism underneath it all, what do we call the real-world events that just erupt out of this chaos? Well, this is where we get into the idea of the black swan. So this term was made famous by the writer and thinker Nassim Nicholas Taleb, and the story goes like this. For centuries, people in the old world were absolutely certain that all swans were white. Why? Because that's all they had ever seen. The very first sighting of a black swan in Australia just instantly shattered that belief they'd held for generations. Taleb uses this idea to describe events that do the exact same thing to our understanding of the world. According to Taleb, a true black swan has 3 key ingredients. First, it's a total surprise. It's an outlier that nothing in the past pointed to. Second, its impact is massive, extreme. And third, and this might be the most important one, after it happens, we all cook up stories to make it seem like it was predictable all along. We connect the dots backwards and we fool ourselves into thinking, oh yeah, we could have seen that coming.
And history is just littered with them. The start of World War I, the stock market crash of 1987, the sudden implosion of the Soviet Union, the unforeseen explosion of the internet, the 9/11 attacks. Before they happened, these things were basically unimaginable to most people. And afterwards, we wrote entire libraries of books explaining exactly why they were all inevitable. So if our world is shaped by these totally unpredictable jumps, why are we so consistently blind to them? Well, this brings us to a really deep-seated human flaw, what you might call our pretense of knowledge. The economist Friedrich Hayek warned about this exact thing in his Nobel Prize speech. He argued that the biggest danger, especially in complex systems like an economy, is acting with this kind of overconfidence, believing we can plan and shape society like a craftsman shapes a piece of wood. He called that a fatal conceit, because we simply do not have that kind of knowledge. And here's the core mistake we keep making. We love to make linear forecasts.
We just draw a straight line from the past through the present and extend it out into the future. That is the turkey's logic. But history doesn't just crawl along that nice, neat line. It jumps. And it's in those sudden breaks, those discontinuities, where all the really important stuff happens.
So, look, our failure to predict isn't just because we don't have enough data. It's more fundamental than that. We can't predict the exact timing of tipping points. We're trying to forecast what human beings are going to do, and they have free will. They often don't even know their own next move. And we're dealing with these incredibly complex, interconnected systems where the whole thing is way, way more than the sum of its parts.
So, if our old models of prediction are so flawed, is there a better way to think about complicated things like the economy? Well, yes, and it means we need to shift our whole metaphor away from physics and towards biology.
This really highlights a massive contrast. The old school, classical view saw the market as a machine, a predictable system that we could engineer and tune until it reached a nice, stable balance, or equilibrium. But the newer view sees it as an ecosystem, a living, breathing, adaptive system that's always changing, always in flux.
And this is the whole idea behind the adaptive markets hypothesis from Andrew Lo. He argues that the market isn't full of perfectly rational people. Instead, it's populated by different species, hedge funds, retail investors, pension funds, and they're all competing for resources. It's the principles of evolution, not physics, that really decide who wins and who loses.
The implications here are pretty clear. In an adaptive market, a strategy that works great today might completely fail tomorrow because the environment changed. Nothing is permanent, and the ultimate goal isn't to find some perfect, optimal portfolio, it's just to survive. Adaptation is what really matters. Okay, so let's tie all of this together. If the world is chaotic, if it's punctuated by these shocking black swans, and if it's best understood as an adaptive ecosystem, then what are we supposed to do? How do you thrive in all that uncertainty? This table kind of connects all the dots for us. You got the butterfly effect, telling us the future is fundamentally unpredictable because of that sensitivity. Then you have black swan theory showing us that history is all about unpredictable jumps, not these smooth, gradual trends. And finally, the adaptive markets hypothesis gives us a new way to operate. Focus on adaptation, because that's what survival demands in a dynamic, evolving ecosystem. So, at the end of the day, the crucial takeaway is this. The goal is not to become a better fortune teller. We can't. The real challenge is to stop pretending that we can. It's about embracing a little intellectual humility and shifting our focus away from prediction and toward preparation. It's about building systems in our finances, in our businesses, in our lives that are robust enough to handle the surprises that we know are coming, even if we have no idea what they'll be. And that really leaves us with one final thought. In a world that is defined by uncertainty, which is actually more valuable? A detailed, rigid plan that's based on a future that might never even happen? Or the flexibility and the resilience to adapt to whatever future actually shows up?